So hello everyone, it's me again, Carlson. So Daniel, thank you so much for the very insightful keynote. I'm very excited to for this session as we will tackle about sustainability, green finance, and financial inclusion empowered by AI. So I have here Karen Denwani, the director of PwC Singapore, and he will be moderating this session. This panel. Over to you, Karen.
Thank you, Carlson, and hello, everyone, wherever you're joining the session from. To briefly introduce my fellow panelists, we have with us Donna Bales, who's based in Toronto. She is a principal research director in the CIO practice at Infotech Research Group, where she conducts research and provides advisory services in IT risk, governance, and compliance. Donna holds advisory and board positions at the Holt Accelerator Compliance.ai and is a board member of the Canadian Regulatory Technology Association, which she founded in 2019. Welcome, Donna.
Thanks, Kareem. Great to be here.
Second on the panel, we have David Koh. He's the Deputy Head of Corporate Banking Asia Pacific at the SMBC Group. In his role, David is responsible for supporting and strengthening the execution of One SMBC corporate coverage and solutions platform strategy for the region. Welcome, David.
Thank you. Good morning, everyone.
And hello to Manuel. He's kindly joining us from Mexico City, based from Dallas. He's an executive director for the Actionable Knowledge Foundational Institute, a nonprofit bridging the divide between digital transformation and ESG. He's also a facilitator and instructor at the Cornell University for Sustainability, Digital Transformation, Innovation, and 5G. Welcome, Manuel. So we have
Thank you, Karen.
Excellent. We have a globally diverse panel, and I'm very sure this is going to be a very interesting conversation. In today's discussion, what we'll broadly cover with our panelists is how the green finance market is evolving, what's the role AI can play to scale up green finance, and building on the theme of the event, how can the public and private sectors collaborate more effectively to accelerate change in this area? So, without further ado, let me get started with you, David. And let's start with the basics. Uh, Help us and the audience understand what is green financing, and also share a bit about how are you seeing the space evolving over the past couple of years. We see a lot of activity in the media around this space, but would love to hear from you, given you're inside a bank and have first-hand experience as to what's going on.
Great. Thank you very much, Karen. I think, green financing from like 2015 onwards, there's been a lot of talk about it. I think green bonds itself launched around 2013. So this is almost a decade in the making. But it's great to say, and happy to say, that in the last 2 years, I think green financing has taken a life of its own, no pun intended, and really driving a lot of things forward. I think the amount of money that's being raised across multiple capital markets and the loan markets, I think we have a lot of companies now that feel like if they have financing needs now and they don't do it on a green basis, it looks bad for them. I don't, honestly, at some level, I wish it was more about doing good and then doing what is right. To be fair, there are a lot of companies that do think that way. And banks like SMBC are very happy to partner with them to take them on this journey. I think the last 2 years, what's been really interesting is to see how the evolution of the sophistication of the structures. We're seeing a lot more sustainability-linked loans now, where the sustainability performance targets are getting more accurate and defined around, getting the right outcomes. Because for a while, it's fair to say for the last, about 5 years ago, people are still questioning the impact of green finance. I think you've seen a lot of that being discussed at COP26 November last year, and I think that's just brought a lot more momentum into the industry and our opportunities to work with our customers.
Thank you, David. That does help us understand as to what the activity is in this space, and it's encouraging that over the last couple of years, there's been more products coming in, and there's also linkage to sustainability targets, making impact more real. So That's very promising. Donna, let me draw you in at this stage. Tell us from your vantage point, uh, what role do you see AI playing in green finance? And if you take a more broader stroke, how do you see AI contributing towards the SDGs? And if you could share a bit about your perspective in this area, that would be helpful.
Sure. Well, I think there's tremendous opportunity with AI. I think the most obvious that, especially to this audience, is the use of AI to help with data orchestration in terms of bringing all the data together in order to satisfy disclosures or to measure performance. And then to be able to process the information and turn it into intelligent insights, and then actually to start making decisions on it, and so embedding the digital rules and things into governance decisions, or embedding it into like robo advisors, for example, in order to make recommendations on a particular asset. So I think there's quite a lot of application from, and data is, data is one of the biggest challenges for ESG, and AI is a means to solve that. And then I think this, in terms of assisting with greenwashing, we're already seeing examples of this. TCFD has done some work in this area, in terms of just basically verification against company claims versus what's available in public sources or through public observation. So I think there's a real opportunity there. But I actually think, and I'm a risk practitioner, so there's probably no surprise here, but I think in terms of risk management, I think there's a massive opportunity here. I think the complexity of the financial ecosystem right now, from a number of factors, risk management needs to become more dynamic, and AI will help do that. And so I think there's those applications, but then also just on physical risk in terms of risk management. So in dealing, when you start thinking about natural environmental risks, and being able to forecast them and be predictive. I think the use of AI will help with that. And then outside of kind of the obvious, our vertical, like in terms of the other, there's applications of AI, to help with job creation using robotics, using it for real-time forecasting of commodity prices, to use it from a spatial recognition point of view to look for poverty-stricken areas. So there's a lot of applications of AI outside of financial services. There's pros and cons, and I'm sure the group will talk about this a little bit more today. But definitely the application is vast.
That's also very encouraging to note that there are such vast applications of AI in this particular area. So what I'd like to do next, Manuel, is just explore and unpack some of the challenges that we're seeing in this area. And Donna touched upon a couple briefly. She mentioned data as one of the biggest challenges where AI can assist in. She also touched upon greenwashing. So if you could help us understand, what are the challenges to scale up green financing and use AI in the space, that would be helpful.
Sure, and thank you, Karan. We're really looking at the AI as a knowledge system, and we are also looking on how the knowledge is transferred inside the corporations. So, starting with green financing, I have a rule of thumb of finding out if the companies are using their marketing budget, they are having a separate budget for sustainability and green impact. And Following this kind of organizational chart, we can see what are the strategies and the corporate expectations from sustainability and ESG. What I am saying really is if you, and I'm a former CMO for about 10 years in Huawei, uh, if you give a budget to marketing and you ask them to talk about sustainability, they will not greenwash. They will take, but they will give you a positive spin. This is what marketing is all about. If you give it to a sustainability group, then of course they are going to look at the ESG. They are going to look at the standards. They are looking at the taxonomy of the reports and so on. So really, when we look at the uh, greenwashing, I would say that it's dominant in many sectors of the industry. I had today, for instance, a student which wrote to me that maintenance, they deal with water leakage, right? So maintaining their pipes and maintaining, which is regular maintenance, and it's a good business practice, of course, is now considered water savings. And these water savings come against the savings, the ESG. And I sort of wrote back and said, good maintenance is good business practices either before or after ESG. You need to do good business. Going on to the role of AI, and I think I'll talk later. AI, it's many times blamed for humans' behaviors because AI it's an excellent tool to highlight the human behaviors and find differences in the way we hire. Donna talked about hiring practices, in the way we treat the environment, in the way we report. And I'll come back to this idea during the conversation today.
Thank you, Manuel. And that is also quite insightful in terms of what you shared around greenwashing. And David, if I may draw you in, kind of keen to understand how big of a problem is greenwashing. Yes, we see it being mentioned in the media, but is it deterring investors? Just help us understand how big of a problem is it, and then collectively, what can we do to combat greenwashing?
I think that's a really good
Uh,
question. Oh,
yeah,
sorry, Manuel, go
I'm
ahead.
sorry.
Do,
No,
do you
no,
wanna...
go ahead. I thought it was addressed to me. Sorry.
No worries. I mean, this is a really key area here, right? And this is where technology and AI can really help. Look, I mean, for me, greenwashing really depends on whose perspective, right? Where it's not been, the elements around green financing, which I touched on earlier, has not been heavily regulated, if at all. Which is why I think what we've seen in New York and what's happened in Germany this past month is actually very instrumental, right, in making sure we start setting more sort of globally aligned standards around what is greenwashing, where people have taken quite a lot of latitude in marketing certain things, right? It's been down to companies, it's been down to the banks, investors themselves along the way to define what an SPT is, what the commitments are, and how they're getting towards it. I mean, it's fair to say, I mean, so many countries, companies have committed themselves to net zero, but behind closed doors, if you ask people how do we get there, most people will honestly say they're still working on it. But and my big thing is as long as they're working on it sincerely and looking to adopt the new latest technologies and working towards that net zero. I mean, here at Ecosperity, it's a big event here in Singapore. Talk about public and private partnership. We are introducing new technologies, hopefully to a global audience, and finding ways towards getting towards this. Now, back to your question though around greenwashing, I think a lot of things are getting aligned right now where people governments are introducing carbon tax, regulators are starting to come up with new standards, where we are able to deploy technology to agree what new sustainability measures there are around environmental impact, and then we put a lot of these things out there and shared openly. I mean, we still have quite a lot of stock exchanges that require their listed companies to publish in much greater detail, right? Environmental reports, sustainability reports, but not all exchanges do that. I think the more exchanges do this, the better it is. It's not about naming and shaming. It's just about sharing great practices and moving us forward. I like to think, there's an element, and I hope I'm not sounding too naive here, where people will rally around each other and do what is right because the urgency is absolutely there.
Thank you, David. And just building on what you just shared. So, uh, companies, countries are all coming out with their net zero commitments. So, Donna, just building on that, people in many quarters feel the pace of change to halve emissions by 2030 or achieve net zero by 2050 and remain within a 1.5 degree limit is just not fast enough. So
Mhm.
the question I have is what's holding us back from harnessing the power of AI? What are the barriers to growth of AI in the area of green finance? Um, and then, and you touched upon in your previous answer about there potentially being some negative implications or concerns. So I just want you to also look at the flip side of the coin
Mhm.
around what are the concerns around AI that we should be aware and conscious of as we embark on this journey.
Okay, yeah. So, I mean, when carbon footprint, obviously, the use of AI needs a large amount of compute power, especially the more complex the algorithm is, and that the complexity of it requires a lot more training, and that takes a massive amount of compute power, and any kind of energy efficiency training techniques are still very nascent. So I think that's one area in particular. So like, so you might speed up something, but at what cost, right? So there's a cost to use of AI. But then I think the other thing, and I think we can't underestimate this, is that the organizational change in organizations, the change management to use AI is still very immature in a lot of financial institutions. And so like there's to actually to actually orchestrate an AI program and have the AI governance and traditional governance models, like the three lines of defense, like it doesn't work perfectly in terms of AI. So there's a lot of organizational challenges that firms are facing. And then if you kind of go to even just from a regulatory point of view, there's still not common taxonomy in AI, common definitions across jurisdictions. So there's a lot of we haven't talked about standards yet, which maybe there's a whole panel on standards because it's such a hefty topic. But there's just like it's very interesting because you're using a technology that is still nascent and not well structured embedded in organizations for something that is really really important, and so they're like intersected, and so I think I think that is one of the major challenges because you're actually got two emerging trends that are running in parallel but are supposed to support each other.
It is a difficult challenge. There is, of course, the need to move faster. So you have all these forces, and I feel like we're at this inflection point in terms of us needing to solve this quickly.
Yeah, we did some work at the association, some work like a private user group around the maturity of AI governance programs, and there's still a lot of work to do, and it's still a lot of challenges, like I said, around organizational change, talent shortages, especially weaknesses in the second and third line of defense, like where they just don't have the resources, the knowledge. There's a big knowledge gap there. So it's they're kind of counter. So it's an interesting. I'm sure you're getting this at PwC. Like these are real challenges.
Absolutely, and I think this is the value of such conversations, because yes, there is a lot of hype and hoopla around AI, but unless we start unpacking what are the real world challenges and how we go about solving them, we're not going to make much progress. And perhaps, Manuel, you can help us, given the area that you focus on, help us just understand what can we do to accelerate adoption of AI products in green finance, and even just generally within organizations, building on from what Donna has just spoken
Absolutely, and thank you, Donna. You're absolutely right in highlighting the challenges, and I'm sure the list is longer. I'll add three things to the list, but before starting, I want to define digital transformation, which AI is a big part of it, and I think it dovetails in what Donna is saying and what David was saying about greenwashing. And AI and digital transformation in general, it's a three-leg stool. It's not only the technology and the artificial intelligence and the data analysts and data specialists we need to use. It has two extremely important aspects. It has to be brought in as part of business model transformation, because it offers the kind of tools that do not fit perfectly in the current organizations. Talking about this, we need to also highlight the fact that the organization has to go through a cultural and a reskilling effort. People have to be skilled in order to understand AI. And now I'll deep dive a little bit more into AI. In AKFI, we contributed to three initiatives coming from regulators: IOSCO, which is the umbrella association for regulators, the Singapore Stock Exchange, actually, and very recently to SEC, the Security and Exchange Commission. And what we are trying to do and propose is how to train the AI systems. As Donna has said, data is very important, but if you do not train the AI system properly and with standard data sets, we can deep dive in another topic, in this topic in another panel. But you can create synthetic data sets which are under the control of the regulators in order to standardize the responses from the AI. Otherwise, you end up with three critical problems. One is fairness. So AI reflects, as I mentioned earlier, the human behavior. The data sets are data sets based on human activity. So we hear a lot about gender discrimination, racial discrimination, racial bias. This is not coming from the AI system, it's coming from the data set. So the data set has to be properly set in order to have a fair system. Also, AI has a major drawback. It gives you an answer but cannot explain. It lacks explainability. And this is crucial in many regulations pertaining to financial industry. I cannot tell you, you have 30% credit, whatever it means, but I cannot tell you why. You know, just the system told you that this. And there are many cases. One is with Wozniak, for instance, the co-inventor of Apple, or the co-founder of Apple, that got a different credit rating than his wife. They share everything. Of course, gender discrimination kicked in, and that was an Apple product. It was the Apple credit card giving him that. So, adding insult to injury. Last but not least, it's about the security. in the privacy. And this is where, again, for another panel, we can explain how a synthetic data set uh, provides the data for training without really divulging the privacy of the individuals participating in the data set. So hopefully I covered part of the question.
You absolutely did, Manuel, and I was quite interested to know a little bit more about examples you're seeing where synthetic data sets are being created by either regulators or private institutions around the world. Have you seen some examples where this has been done?
Private institutions much more than regulators. I think regulators are behind in terms of issuing regulatory rules. If I haven't looked into, but I'll look after this panel into the European community. These regulators, they seem to be a little bit more advanced, and the same is with the Singapore. Singapore is also a hotbed for ESG and AI. But the short answer, I've seen it with bankings and other non-banking institutions using synthetic data sets, in part because you don't want even to expose internally the private data of your customers, right? So even in marketing organizations and so on, they use synthetic data.
Thank
And for just to precise to make the synthetic data, it's a data model or it represents the data set again without exposing the privacy of the and the security of the participants.
Got you. Those are absolutely critical topics that need to be dealt with as you build AI models, because without the right amount of data, and as Donna mentioned, vast amounts of data, you won't have accuracy in these models. So that is a challenge we're seeing in this part of the world as well. And the sooner we can sort of find solutions to it, the better. So on that note, David, just want to get a view from what's happening within SMBC. Uh, if you are able to share some examples of technologies that your organization is currently using or looking to use where AI features are a part of this technology, that would be really encouraging to know that it's no longer just in a theoretical construct, but you have financial institutions actually leveraging these technologies today.
Great. No, thank you for that. Let me just first say, really loved what Donna and Manuel had to say about data and AI and how we use it, because a lot of that informs us, as a financial community. And like even today, we are participating in the Singapore launch for the Glasgow Financial Alliance for Net Zero, GFANZ. It's a really big thing that's come out primarily last year. To get over almost 500 banks and hopefully more to come, to get ourselves aligned. Because again, collecting the right amount of data, the right data, and data sets, and then the algorithm, which Donna touched on. We must have the right taxonomy and make sure there aren't any built-in biases. Because the other thing I'd like to sort of marry to, and this very relevant to the things that we're doing at SMBC, is how do we marry this to the just and urgent energy transition? This part of the world in Asia, where there's still a lot of fossil fuel, that's being used to generate power. How do we make sure that as we do the right thing towards net zero, that the communities and the people here can still have access to affordable energy, so that it can still achieve better economic outcomes. But in terms of what SMBC is doing specifically, we're very pleased to be partnering with MAS and Temasek here locally on a project called Project Nova. It is an AI-powered platform. We're starting a proof of concept right now, looking at the real estate industry. How can we start measuring embedded carbon for new builds? And then also, once we've got what we say is a green building, there are these local standards, whether it's a gold plus or platinum rated green building. what is the operating carbon intensity of these buildings, and how can we then really find ways to, as we bank the real estate industry. Anybody who knows anything about real estate, it's a highly leveraged industry, from development to even you see from people who own the buildings to the funds that own and operate the buildings. There's a lot of leverage in there. How do we then, from a banking perspective, also lean in and make sure that all the buildings around the world get ever greener? I mean, I love the fact that here in Singapore, the government has actually launched a Green Plan 2030. It's actually a very comprehensive green plan. And what we'd like to see, how Singapore will be come 2030. But a big part of that, 80% of our GFA, is meant to be green by 2030. It's a big task, but I think banks like ourselves have a big role to play. We're hoping that Project Nova will help us lean into this, and if it works for real estate, then how can we take the same AI and power technologies to shipping, to agriculture, into different types of manufacturing? I think that's a huge potential, not just for Singapore, but across the region and even global, as we adopt these sort of platforms. One other thing I think I'd just like to share is it's partnering with MAS. It's a company called Banyan Infrastructure. It started in the US. We're trying to bring it here to Asia. And what they're trying to do, because SMBC, we've been one of the most successful project financing banks in the world for quite a few decades now. But we see projects for renewable energy, the metrics are completely different. The old days, a lot of projects are running in the hundreds of millions, if not $1 billion. These days, you look at a solar farm, you're talking about a 10, 20, a $50 million project. It's a huge solar project. It's hard to do the math from a banking perspective to do this on a non-recourse perspective, especially when the payback periods, even for solar, as at today, it's about 9, 10, sometimes even 12 years, depending where you're operating and putting it and selling the renewable energy. So how do we then make sure we've got an AI-enabled platform where we can look at the projects we will finance on a non-recourse basis, their performance. We will track, who are the suppliers, who's buying energy, what are default rates over time, so we can make the financing cheaper as well, right, over a period of time, and be able to do a lot more of these. Because if we had like a really good year in previous years for the project finance team, uh, you know, 12 projects a year would be a really good year if each project's over $1 billion. But these days we're looking at, I hope, myself working with my colleagues in project finance, if we can start doing 200, 300, 400 of these deals and roll out a lot more solar farms around the world, that'd be the best outcome. Yeah, I think so. We're working on a platform like this as well. And then last but not least, we're also looking to help introduce new technology. It's a fascinating new company called Gate Global, GAIT Global. Again, using AI to measure GHG concentration in the air at 10-second clips. Again, just the sheer amount of data they are able to collect through the sensors they'll put, where we can put them, whether in a building, by a runway at the airport, deep in the forest, to maybe perhaps even a palm oil estate, and see what sort of carbon intensity there is, or what we might have lost, or what we can gain reforestation through reforestation. So some phenomenal stuff that's going on out here, and we're just really glad SMBC can be part of these.
David, that's a very positive thing to hear. You've kind of made me feel more optimistic of where we're heading, given the areas that SMBC are exploring. So kudos to your organization and full support in charging ahead on that front. Donna, David touched upon some initiatives that SMBC are working with the Singapore government and MAS on. I'd love to hear your perspective from the part of the world you're in around how public and private are coming together, collaborating in these areas, whether in the area of green finance or AI, to collectively solve some of these societal issues. If you have examples of some programs or initiatives that you're seeing in the Western Hemisphere, that will be extremely pleasing to hear as well.
have a few. I got to say, I love what you said, David. And having lived in Singapore 8 years ago, Singapore was so ahead in terms of green real estate, even then, like, in terms of how the buildings were built. And so I think you're a perfect case study for this type of initiative. I think it's just, it is great, and it'll be an inspiration. I think for us here, there's a lot going on in the energy sector. But a few things I wanted to, I think we're seeing a lot more. We're starting to see what David touched on earlier on outcome-based financing. So really, like, instead of, okay, we're just doing a green bond, but really connecting it to the actually outcome that they are looking to use the funds for. So that is one area. And the other thing we've seen, the regulator here, our prudential regulator, working with 6 banks to look at the systemic risk within the system, and looking specifically more at transition risk, in order to, and doing scenario analysis and trying to anticipate, how to manage the risk. So I thought that this is a very good case study, because the risk management of the coal carbon management and green financing, and the potential impact on the financial system is potentially great. And so this was a very good kind of public-private collaboration here.
Thank you, Donna. And I know we have a few minutes left, but just checking if anyone from the audience has any questions for the panelists, please pop them in, and we'll happy to answer them if time permits. But while we just have a couple of minutes, I just want to reflect on some of the things that I've heard in this conversation, and it's been wide-ranging. We looked at how green financing is becoming more sophisticated. David shared about some of the products in that area, such as sustainability-linked loans and targets being set for companies that are becoming more accurate. Donna, you mentioned about the wide range of applications of AI across different fields, and how each of those areas can be further explored. Tying to that, in the previous keynote from Daniel Jiang, we did hear some examples from her as well, and calling out one thing that she did talk about AI. She called it the guardian angel, given that there is also an application of satellite monitoring and how AI can be used in that respect.
Mm-hmm.
We also heard about some of the sobering side and the more practical realities around AI. There are challenges around talent within organizations. There are challenges around organizational change. Manuel touched upon the need for there being fairness and explainability when these models are built. There are concerns are also around the compute power when you have vast amounts of data and machine learning. So the topic is wide ranging. I hope as the audience listens to this, they just take a few of these points back, reflect on it, and see how we can act upon this going forward. And ending towards this conversation, it was promising to hear that AI is being used today. SMBC are applying it. They are investing in platforms and companies and initiatives. And I feel the path forward is extremely encouraging and optimistic. So I just want to thank each of you on the panel. I truly enjoyed this conversation. I learned a great deal. I hope the audience did as well.
Thank you, Karan. Thank you, Donna and Manuel. It's been great.
Thank you.
Appreciate it.
Thank you so much for thank you so much, panelists, for that very insightful session, and of course, Karen, for moderating the session. Indeed, AI has become the key factor in helping investors and risk managers analyze ESG data, and can be collected in both structured and unstructured format. So let's just have a coffee break for a few minutes, and get back at 11:05 Singapore time for VJ's keynote entitled "Data Management Risk: Using Data Safely to Drive Value." See you there.
See you.
Thank you.
Thanks so much.
Bye.
See you.